Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Thursday 29th of May, recording the video almost 5 minutes to 8 PM Eastern Standard Time. We got more upwards movement than I'd expected, and upwards movement remains beautifully contained in that small channel on the hourly chart. I'm expecting now that we may see 2 more days or sessions of upwards movement to the target 1939 to 1940, and upwards movement is very likely to overshoot that pink 1-3 trend line, the upper edge of the contracting diagonal on the daily chart. When that's done, we'll be looking out for a sizable trend change. Let's have a look at the daily chart for the bullish wave count. Both the bull and bear wave counts expect that we're seeing an ending contracting diagonal for a final fifth wave to complete a long impulse that began back in October 2011. When this ending contracting diagonal is complete, intermediate wave 1 will be perfectly complete, and I'll expect a trend change for intermediate wave 2. For the bullish wave count, that intermediate degree correction should be choppy and overlapping, lasting several weeks or a couple of months or so, and ending its support at the lower of the double aqua blue trend lines, but we're not there yet. For contracting diagonals, the final fifth wave normally at least comes to touch the 1-3 trend line, and quite commonly has a small overshoot of the 1-3 trend line, so that's what I'll expect to see here. Ending diagonals have all of their subwaves which may only subdivide as single zigzags. That's why I've labelled A, B, C for this third wave. It's a third wave within an ending diagonal, so it has to be a zigzag. That's the only time you're going to see a third wave labelled as anything other than an impulse. For an ending diagonal, the subwaves have to be zigzags, and the fourth wave should overlap back into first wave price territory. So we have a series of zigzags, 1, 2, 3, 4 and 5 is incomplete. Within this zigzag for minute wave 5 we have an impulse for A, a triangle for B, and an incomplete impulse for C. Let's look at this. Before we go to the hourly chart, so far Minuet Wave C has lasted 6 days or sessions. It's even in duration with Minuet A, but it's not over. If it continues for 2 more days or sessions, it might complete in a Fibonacci 8, so that's what I'll be looking for. Let's look at the start down here, this point down here. So within Minuet Wave C, it may be either an impulse or an ending diagonal. It has to be a 5. So far it's pretty clear it's not an ending diagonal, so it's an impulse. We have 1, 2, an extended third wave with no ratio to the first wave. The fourth wave showing nice alternation in structure with the second wave. This is a zigzag and this is an expanded flat. The fifth wave begins here. The fifth wave has to subdivide as a 5. So far we have 1, 2 and an incomplete third wave. So I'll expect more upwards movement for at least 1 more day, probably 2 to get to the target, probably to have at least a small overshoot of this pink 1-3 trend line. Within the final fifth wave, within microwave 3, no second wave correction may move beyond the start of its first wave below 1909.82. Draw this channel using Elliott's first technique from 1 to 3 and then place a copy on 2. So far, the downwards edge of this channel is beautifully showing where downwards movement is finding support. We have a bit of an overshoot here. That's okay, it's not a proper breach. The upwards end of the channel should show where we're going to find quite strong resistance. It's really typical for the middle of the third wave to breach these channels because the third wave is the strongest, and that's exactly what we've got here. This looks really typical. The third wave has the strongest momentum. We're seeing a slight slowing of momentum on MACD as the fifth wave unfolds. At 1940, sub-Minuet wave 5 would reach equality in length with sub-Minuet wave 3, and I will be expecting to see a ratio between 5 and either 1 or 3 because there's no ratio between 3 and 1. And so that may take us another 2 days of overall upwards movement with a wee slowing of momentum as it comes to an end. At the daily chart level for the bearish wave count, we're still seeing a 5-wave impulse beginning back in October 2011. almost coming to an end with an ending contracting diagonal. The target's the same, the maximum's the same, the expected upcoming trend change is the same, except for this one, the trend change would be its cycle degree. We will assume that the trend remains the same until proven otherwise. The trend is your friend. Until we get a breach of the lower edge of the huge maroon channel, this is copied over from the monthly chart, while price remains above that trend line, we'll assume that overall the trend is up. If this trend line is clearly breached with downward movement, then this bearish wave count would be my main wave count, and we will assume that the market is in a new cycle degree trend change to the downside. That's all for me today with your S&P analysis, and I hope that all our members are having a fabulous day.